All right, dear guests, please keep your seats. We're about to start a really dynamic session here, Dubai as a fintech hub, a rising star. I am delighted to welcome on stage Ms. Nihal Abagatos, Regional General Manager Middle East of Middle East and Africa, of Ozone API, and our esteemed panelists who will share their insights on the opportunities here in the MENA region. Please give them a warm welcome and welcome Nihal, and we'll introduce each of our panelists.
Thank you. Good morning, everyone. It's a pleasure to welcome you to a panel discussion that might just be as forward-thinking as Dubai itself, hopefully. So in the rapidly evolving world of finance and technology, Dubai, the UAE, is not just participating in it, it's leading the charge. From its progressive regulatory landscape to national initiatives to a growing ecosystem, the city is embracing innovation at a pace that's as impressive as well as transformative. In this panel, we will explore why Dubai is rising as a global fintech hub. And joining me today is our esteemed panelists who are the forefront of this exciting field, turning complex concepts into groundbreaking realities. They have been playing a vital role in helping financial institutions and fintechs navigate and seize the opportunities that lie ahead. Without further ado, I'd like to welcome our esteemed panelist, Mr. Namir Khan, Chairman of the MENA Fintech Association and founder of FILS. Mr. Samir Ali, Safar Ali, he's the Senior Counsel, AI and Fintech Lead at Baker & McKenzie. And Mrs. Serena Sebastiani, she's the, God. Yeah, sorry, Serena, I know you well. Director of Financial Services Advisory at PwC Middle East. And last but not least, Mr. Mo Ali Youssef, who's the CEO of Fuse. Thank you very much, and we'll dive right into it. Hello? Yeah. All right. Thank you very much, esteemed panelists, for making it today. As you heard, I think we've set the context for the discussion today, and I'd like to start with the fintech founders with us today, Namir and Mo, who have chosen Dubai to be a home for what they have set out to be a groundbreaking, I have to say, firsts of many within the region. Perhaps with the context, in the context of digital assets, Mo, we know there's quite a few developments around the regulatory landscape on digital assets. You've got with the onset of VARA and a few others. So you're a regulated entity, and so how does this set out for you with the growth of digital assets in global growth in digital assets to 2 trillion as of end of $2 trillion US dollars as of end of 2022? With an expected growth in the MENA region to 450 million US dollars. How do you see the existing regulatory landscape supporting your growth at Fuse? And if you could give us a bit of a background of how you've been helping financial institutions get on board as well.
Yep. Thank you, Nihal. You're so far away.
I know.
Look, first of all, hi everyone, and thank you for taking the time to be with us this morning. We appreciate every single one of you who's sitting in a chair and listening to what we're talking about. So I've been in the region for 15 years. I'm the CEO and co-founder of Fuse. I'm also the co-chair of digital assets at MENA Fintech Association, which Mr. Namir will be covering shortly. Our goal really is to drive regulated digital assets infrastructure across Middle East, Africa, and Turkey. The reason we chose UAE was for a number of reasons, right? Number one, as you said, Nihal, there's a very robust regulatory framework here. You have VARA, you have FSRA, DIFC. There's a number of different regulators here who are really pro digital assets. And when I say digital assets, just for context, it's cryptocurrency, stable coins, tokenized assets, and CBDCs, right? And whatever comes next on DLT. And so the regulators, and this is the only place in the world where you can sit down with a regulator across the table, explain your use case, explain your business model, and really find the right framework that makes sense for your business. The costs are manageable, the regulators are very friendly, and there's a very strong dialogue that takes place with every single applicant who goes through that process, and all that is very conducive to business. I think one of the other reasons why we've chosen to set up here, the UAE itself is about a $35 billion crypto market, but across the region, you have over 1 billion people within a 3-4 hour flight. It's the fastest growing region for cryptocurrency adoption globally, and there's just a lot of demand. And the thing that we like about it is that cryptocurrency has real utility here. So you go to some markets like Egypt, Pakistan, Turkey, customers are buying stable coins just to hedge, right? It's a investment mechanism because they cannot get hard dollars. You go to Kenya, Nigeria, Lebanon, people are using cryptocurrency to actually do payments. And so there's a lot of utility here. And so this region as a whole with UAE and Dubai as the anchor just made a lot of sense to us. The third reason is that there's a lot of access to liquid capital. There's a lot of bullish long-term views or bets that VCs and investors are taking in this space, and that's always great. I think the last thing, or the fourth and fifth point is, since I've been here for 15 years, we've seen a big increase in the talent pool because of Dubai and its unique positioning at the global scale, being safe, being a great place to come and build. A lot of builders, a lot of entrepreneurs, a lot of digital asset companies have set up here, and now the talent pool now is much, much bigger. And it's a very long answer, but I'll just give you the last point, was that the ecosystem here is extremely strong, right? So we have partners or friends such as PwC, MENA Fintech Association. You have Binance, OKX received their license this week. So the entire digital asset ecosystem is setting up here from UAE to Singapore to Hong Kong. Everyone's coming here, and it builds a great ecosystem where you can collaborate and you can actually build together.
Thank you, Mo, for the very comprehensive answer. And this, speaking of ecosystem, I think this brings me to you, Namir. So as a chairman of MENA Fintech Association, I think started, 5 years ago? And where it is today in terms of the growth of the number of fintechs, I think by far we have been receiving a lot of requests to join, not to just join the MENA Fintech Association, but use the platform to be able to get access to regulators, to get access to sit around the table with the policymakers and be able to shape the upcoming future of financial services in the country alongside the tech vendors and the incumbents as well. So from your point of view, and I would like to come to Phil's for a second, but if you could just let us know about the evolved ecosystem within the fintech industry, being at the heart of it in MENA Fintech Association. How did this work out, and what kind of support was received from the authorities and the regulator to be able to see this growth?
Thank you, Nihal, and pleasure to see you all over here. So in terms of the journey, as mentioned by Nihal, started 5 years ago. But it's important to understand what Mo mentioned regarding the conduciveness of the environment that we have today, where it all started. So the foundations were laid, like I said, 5.5, 6 years ago, with the financial centers understanding what the future holds. So, the evolution of what we see today as VARA must have been thought through and has been thought through by the leadership, by the regulators, future forward players, way before than what you see today, right? It means they were thinking ahead of time, right? And in terms of the I would say why Dubai, is known as a fintech hub globally, or why UAE is is one of the biggest hubs globally is because of the fact that, as mentioned by Mo, that you will have regulators sit in front of you and be accessible to you versus what you would find elsewhere. They are open to new ideas. They're open to new recommendations. And they will find a way for you. Now, I'm not saying this because I'm sitting on a panel and I'm being, we've been recorded over here. I'm not saying this for that. It's actually the truth. So if you actually have a good proposition, you go out and you speak to the regulator. The regulator will respond back quickly. And I'll give you a feedback that we had way before. Um, uh, Almost 5 years ago, Nehal, we had this conversation too. And I think I was in Luxembourg, and the community over there said that the regulators in UAE are responding really fast. Like we haven't really seen that. So I think that really set the trend for then other regional markets to follow as well and do better, right? So you always learn from the other and you always become better. And then once this trend started, then you had the ecosystem players, which is institutions and organizations operating in the ecosystem. They started to open up as well once they saw the regulators are opening up, right? And then after that, courtesy all other ecosystem players, it became a joint movement, which snowballed into what we have today as a leading fintech hub today. So I would say that it has been a mindset that you can see not just from the regulatory point of view, but it has been a mindset that you see around in the city or what you see around in the country.
Thank you, Namir. And I'd like to congratulate you on top of that for the launch of FILS.
Thank you.
Quite timely around the COP28. And that's a very interesting field. I mean, you've managed to bring digital payments, converge digital payments with sustainability and ESG principles, right? I'm just very curious about how has this been received on the other end? So from in terms of whether banks, whether other institutions, how was this initiative received? And what kind of, let's say, government initiatives were you able to bank on to be able to get FILS to where it is today?
Absolutely. So, the overall, how we started FILS was 1.5 years, 2 years ago. And our friends like Mo have always been a part of that journey, right? Where I used to discuss this, a proposition with all our, close friends. But the thing is, the important thing is how it has been received has been absolutely amazing, right? You see that you've made a recent partnership with Magnati. It's a live integration that we have done. Then we have partnered with the EAN, which is 45% of the digital payments market. Magnati is 35%. We're launching a major bank on the 25th of Jan. It's a very large proposition and a very large account proposition that we're launching with the leading one of the leading banks of the country and the region as well. We have great partnerships already in place in Saudi. We're launching in Pakistan with great partnerships again, Oman, Bahrain. Now, the reason why I'm giving you all these countries is how these countries have received this and how actively they're participating in partnering with us. Now, why is this? Because net zero proposition today is a global proposition. Every country has an agenda and every organization has a net zero proposition as well. So everyone, it is not a want anymore, it is a need today, right? Because if you do not comply to that need, then eventually you will have that Kodak moment like the digital companies had.
Just to back this with some numbers, the global ESG-focused investments are projected to exceed $53 trillion by 2025. So with FILS, I guess you're in focusing on this in the region and enabling a number of companies to get on the ESG wagon. Also, from an investments perspective, this is quite an opportunity for.
And why is it even a bigger opportunity? I'll give you the number as well. So right now, the current carbon market state, carbon markets is what we basically link. So FILS has the distribution arm where we enable businesses to understand their emissions, calculate the emissions, then we connect them with our supply side of the business, which is carbon markets. Carbon markets today, as we speak, is $909 billion, right? And the voluntary part of it, the voluntary carbon markets, is around $4 billion as we speak. Voluntary carbon markets by 2030 is going to be worth $40 billion. So that shows you the growth that is expected in this specific segment. Hence, complementing it with the numbers you're basically mentioning on the investment side.
Perfect. Thank you, Namir. We cannot. I mean, we've taken a view from the fintechs that have set out here from an ecosystem builder such as the MENA Fintech Association. But I'd like to bring this discussion from to Serena, who's been working very, very closely over the last few years with institutions, with financial institutions, to help them seize the opportunity on what's going on. It's quite fast-paced. I'd love to hear from you. How are all these changes? How are all these regulatory changes being received on the other end of the spectrum from a financial institution perspective? And do they see them as opportunities, as threats? And what has been the development? How ready and how receptive are they to what's coming? Well, be it around CBDC, being around the open banking, national open banking FIT program that we see coming up. You've been in close contact with them, so how could you help us understand their stance?
Thank you. I think we have a incredible opportunity, right, to be in the Middle East, and this is not only the UAE, but all Middle East countries have very large and strong government support. We see the UAE, but Saudi Arabia, Bahrain, Qatar, they all have their national strategy to innovate the financial sector. So the government support certainly accelerate innovation in the financial sector, which is a priority in the Middle East, in the GCC, and the UAE specifically. We have amazing realities like Fuse with Mo and Fields with Namir that look at, that have this forward looking, right? But there is definitely a government support and banks and institutions need to be kind of, there are different responses. So what we have seen in the UAE is the central bank that has been silent for a while compared to other regulators in Saudi Arabia or in Bahrain. But they've recently launched this program. It's called the FIT program, Financial Infrastructure Transformation Programs. It has 3 pillars, and along these 3 pillars there are 9 initiatives. Some of these initiatives were already there, basically. They're old initiatives that are continuing developing, and some are new. And you mentioned 2 of them, CBDC and open finance, that I think are the 2 that have the higher impact on banks, right? And how banks rethink their active participation in these type of programs, but also rethink how they collaborate with fintech and with the amazing innovative realities that we have in the UAE specifically. The impact really depends on how banks want to be part of this. I mean, if it's about you can have. You can literally generate a positive income in your balance sheet, in your revenues. I mean, with CBDC, looking at the treasury, looking at how you make cross-border payments more efficient, interbank payments, or you can only look at the negative side and I have to enhance privacy and security, and I have a lot of infrastructure work to do. And this is what fintech are here for. There is another incredible example that has recently entered the UAE, R3. R3 is a blockchain infrastructure, has supported the Bank of Thailand in developing their blockchain for their infrastructure for CBDC in Thailand, for the BOC. They're now supporting the central bank here, ready to support the banks as well. So it's really a matter of how far banks go, how they plan strategically, and how they actually seek support from fintech.
Yep. Actually, it's quite interesting. We've always had this over the years. How fast can regulators come on board? I mean, between are they keeping up with the innovations that the banks want to onboard, want to come up with, versus the regulatory support and the regulatory landscape? In the UAE, it kind of feels like the table has turned a little bit, whereby the regulator is bringing on board a new infrastructure, innovative infrastructure, new regulatory, new initiatives, and the banks are now having to get ready for that. It kind of feels like it's the tables have turned a little bit. That's how fast-paced it's become. And this brings me to you, Samir. I mean, you've been very close to the regulators as a senior counsel. I'm pretty sure you've had to keep pace with all of the different initiatives or regulatory announcements and you know the progressive regulations that have been going on. I think before we delve into that, I'd like to understand, given the landscape between having a central regulator, having independent jurisdictions, having authorities like VARA, it can seem quite confusing for many, right? So where do I go? For what? And how can one navigate this landscape? Does it cause a sort of a confusion? Is it a deterrent? Or is it actually an opportunity and a catalyst for companies like Fuse and Phils to come on board and hit the ground quickly? How do you see that?
That's a very good question, and thank you all for attending this session, giving us your time. So, having been a financial regulatory lawyer here in the UAE for 10 years, and having seen that the landscape developing, you are right. When it comes to, if we'll focus on, I mean, fintech is much more larger than just digital assets. But I'll talk about digital assets, right? When you look at the environment, the FSRA in the ADGM, the Abu Dhabi Global Market, which is Abu Dhabi's financial free zone, was the first regulator in the region to come out with regulations and guidance almost as soon as Switzerland and Singapore came out with their golden standard of categorizing tokens into utility tokens, commodity tokens, and security tokens. Yeah. I will say that I actually think that the tokenization environment has gone a lot more detailed than that. When you actually talk to people who actually do tokenization, it's a lot more complex than that, and I think regulations around the world need to develop to adapt to the reality of the tokenized ecosystem. But on your point, we hear the UAE as a home for fintech, but then devil is in the detail when it comes to the next question about, okay, so how do I get set up? Where do I get set up? And having spoken to startups, big tech, institutional financial investors, angel investors, big question is, where do I get set up? And there is a parameter check on that first in terms of my product, my offering, or what I want to do. Where is the home of the best environment for that? So, for example, if we're talking about security tokens, VARA is not your regulator. There is, in onshore UAE, so maybe I should just explain that very briefly for those who are not familiar. The UAE is a federal jurisdiction, and it has two financial sector regulators, the central bank and the Security and Commodities Authority, which is like the SEC or the FCA of the UAE, okay? And then within Dubai, you've got a separate jurisdiction that's common law based, and that's the DIFC, Dubai International Financial Center. It has its own regulator, the DFSA, Dubai Financial Services Authority, and it's sort of...
Take notes, everyone.
Yeah, it's a tier one regulator that pegs itself to Europe and other best-in-class global standards like in Singapore, Switzerland, etc. And then that was established in 2004. In 2014, Abu Dhabi did something very similar and established the ADGM, Abu Dhabi Global Market. And again, it has its own financial service regulator. It's called the FSRA. And then to make matters even more complicated, within Dubai, but outside of the DIFC, we have the world's first dedicated virtual asset regulator, VARA, Virtual Asset Regulatory Authority. So there's a lot of acronyms there. So number one, I would say, I'm also the chair of the Policy and Regulations Working Group for MENA Fintech Association, and we're trying to launch initiatives to make some of the regulatory mapping on this a bit clearer for those looking into the jurisdiction. But I would say that, first of all, try and talk to someone who has some experience in terms of navigating this kind of environment. That's number one. Number two, when you're taking that step forward and you've done your research or you're connecting with someone who can help you, identify the parameter issues. Which regulator is even relevant to my business? Like I said, security tokens, VARA is not your regulator. Specifically in their law, it carves security tokens out. So identify where is your parameter issues and where is the market that you want to tap. And last but not least, your flavor of experience with the regulators. Sometimes I recently set up a Web3 focused VC fund for a client, and we just said, okay, let's go and meet one regulator and meet the other regulator, and it's the same kind of license we're looking to apply for, and let's see what the flavor is and see what the experience is. And we're talking about the speed of regulatory responses. Literally, one of the regulators just replied, I emailed them at 4 p.m. and I had a meet, and by 5 p.m. the meeting for next day at 11 a.m. was set. I mean, it's impossible to do that in the US or the UK or anywhere else.
Samira, I really wish I met you like 14 months ago, because this knowledge you're spewing is amazing. I have companies who contact me every week to come here, and no one understands what's the best framework to go after, whether it's fintech or digital assets or brokerages, all that kind of stuff.
Yeah.
We should do more. We should do more, or we should do more roundtables. And a lot of people kind of, I very recently started doing a bit of conferencing, because in the law world, when you do a lot of speaking on stage, a lot of people say, well, you're not doing any work, right? Is that your job? You're speaking on stage. I only did it for one purpose and one purpose only, because I started to see that from the law side of things, the regulatory side of things, I didn't see the right kind of answers and the right kind of people speaking on stage. And last thing I will mention, and this is very important. So, by the way, I do this as my contribution and to try to share the education and experience. One thing I will mention is this, and we always talk about the good side of things. I'm going to talk about the bad side of things. In light of the UAE and other jurisdictions in the region becoming a hub, it's attracted. We have regulatory clarity here. We're not operating in a gray zone. So every day I get calls from US fintech companies that want to come out here, because there is a clear roadmap to implementation, right? But the amount of people that are operating businesses that are not regulated based on the hype is insane. Is absolutely insane. And then people will look at product offerings and say, that sounds interesting, and then without doing their due diligence. So I'm specifically in my mind, I'm thinking about, Web3 VC environment. There are a number of, for example, Web3 VC funds that say that they're regulated, but they're not. They're even regulated as an IT company, let alone an asset manager, let alone a VC.
Serena, you wanted to say something?
Yeah, I mean, this is great. Thank you. And I think that on Web3 specifically and digital assets specifically, we have at the moment we have more than 1,800 Web3 and DLT digital asset companies operating in the UAE. This comes from a study of Crypto Oasis that has been done. Late last year. VARA has started a great, amazing campaign that really requires huge effort to actually regulate all these companies. So all Web3 digital asset companies operating, that were operating already, so legacy firm operating already in the UAE are now need to be regulated by VARA, whether they offer virtual asset related services in Dubai. And I tell you, I mean, from a regulator's perspective and a newly established regulator perspective, starting looking at 1,800 companies is an effort, is huge. So, and this is really like the evolution and how positive is also having multiple jurisdictions within the UAE, but the evolution of the regulation that the UAE is having, becoming a more mature multiple jurisdiction.
I mean, we're definitely going to be seeing a wave of enforcement actions. It's inevitable and it has to happen. It just simply has to happen because there's too many people in the environment that, you get a client and they say, how do I set this up? And you say, well, this is the license framework you go for. And in some cases, there isn't a license framework. So then we talk to the regulators about creating something bespoke. And then
they respond. They respond quite quickly.
They do, but then my clients will turn to me and say, do we really need to do this? Because these guys are doing it with, how are they doing it? And then you start doing your research. You go on the register and you see what kind of licenses they have. And you think, they're not even regulated to do what they're claiming to do. One last point I will say on what you mentioned about the banks. One interesting thing, and your point about the banks trying to play catch up, is what we are seeing is a lot of the banks, as soon as you talk about, if you're a business, as soon as you talk about digital assets, tokenization, anything crypto, the challenges for actually getting a simple bank account, an operational bank account for your business, let alone a customer account for your customer, that's a whole nother journey that people they don't talk about. So, the regulator has come out, the central bank has come out with guidance for banks on what they need to look at. But I think it's even maybe in the future quasi-mandatory for the MLRO or compliance function in any of these onshore banks in order to be fit and proper, which is what is a regulatory requirement to do, that they need to have credentials in terms of understanding DLT technology, blockchain, and understanding how this stuff works.
Thank you, Samir. This has been a very, very comprehensive summary of where we're at. But what I'm hearing is, with everything that you've said, the current landscape has not deterred people from coming. It's actually the complete opposite. There is still work to be done on some fronts in terms of the licensing framework, perhaps. But it's good to see that there's growth, which means that maybe, regardless of scale, it is. I think it's mostly around the regulatory, progressive regulations that are attracting a lot of the fintechs to come out here, and with initiatives such as the Open Finance Initiative, allowing third-party providers, allowing fintech legitimately, in a standardized manner, access is something that's going to attract even more fintechs, I guess, in a very near term.
There was a growth, just a number, like to what you're saying, like there was 92% year-over-year growth in the amount of fintechs that have expanded over here in this market. And whereas if you look at it in other markets, it has declined. So that shows you the traction that this specific country in the region is getting still.
Perfect. We have 4 minutes left. I just want to maybe ask a question that's not necessarily fintech related, but I think that is it correct to assume that the growth in fintech companies and the growth in perhaps specifically around the payments landscape has also had a spillover effect on other verticals? So we see growth in e-commerce, we see growth in other verticals that has been very, very strongly affected by the onset of new payments schemes, or maybe perhaps soon enough I could pay through digital asset account, right, Mo? Very, very soon. Can I do that? Yeah. Okay. But I think. Does anyone want to comment on that, on how the growth in the fintech industry, maybe in the payments landscape specifically, have also had a spillover effect on other verticals?
Unless somebody else wants to do it. Look, on payments specifically, there's a couple of things to mention. Number one, when it comes to the central bank's docket for payment services applications, there are a lot of, we're telling clients that, expect a 1 year to 1.5 year wait list. It is, and I think some of the issues there are probably because we've got existing money exchange houses, which are actually the ones who traditionally do the remittances, and now the business is being disrupted by fintech. So I think that has a bit of a learning curve. I think when it comes to PSPs, we've got so many in the market, or so many want to come to the market. I don't think we've got enough market to deal with everyone. So I think that what we probably will see is two things. We'll see more and we'll see less. What I mean about we'll see more is because what's the purpose for PSPs? For money transfer, for capital transfer. Okay, so we're going to get more PSP players that are tapping into other markets that the other ones are not tapping into. For example, one focused on Turkey and Central Asia, another focused on Africa, another focused on Southeast Asia, LATAM, etc. Right? The other thing we're going to see is consolidation, because it's just impossible for the market to have that many players. There's not even that many banks. You don't talk about banks in the market. You put a parallel, there's probably more PSPs than banks who want to come in. So I think we'll probably get consolidation and then more regional expansion that's building on the soft infrastructure that Dubai has built, which is part of the reason why we're all here anyway.
Thank you, Samir. Sirin, I think you wanted to comment.
Yeah, I mean, this is great, right? And it's how finance can be contagious with other sectors and the other way around. I want to ask, who is not working in finance in this room? Who is not working in finance? One person. Two. Okay, amazing. So, I mean, this is really finance, and Nihal has just introduced the concept of embedded finance that is basically incredibly supported by open finance. So how fintech collaborates with banks, how data can be transferred and shared. And this is not only about fintech and banks, it's about any sector, energy, telco, e-commerce, as you said, and
automotive,
now payments,
tourism.
automotive, how payments and the growth of payments has influenced the growth in e-commerce, and the other way around, by the way, because I mean we come from a post-COVID period where e-commerce boom has obviously also generated a payments boom. I mean, we have first row. We have the father of open banking, Chris. So I feel embarrassed speaking about open finance in front of Chris, but it's contagious. It's all about sharing data and how seamless all the process becomes. And certainly we'll be handing up paying in digital asset for sure in stable coins.
And very briefly, that open banking, open finance, that's a perfect area where we still need to have better regulation. Because open banking is a subset of regulations and a license, right? But at the same time, you have to balance that with data protection. So try going into that jungle without a map.
Samir, you and I should catch up after the session.
Sure. So I'm just saying, like, some regulators around the world have actually come out, like the FCA has come out with a regulatory guide on what are the parameters between GDPR and PSD2, right, the Payment Services Directive. We need something like that, and it's kind of the stuff that we're working at the MENA FinTech Association to try to develop. That's kind of the stuff, the regulatory guidance and clarity for the different fintech subsectors.
Fantastic. Thank you, Samir. And I think that's up and coming as part of one of the national initiatives that we will see around open finance and the framework and the standardization, the licensing, and everything that comes with it. So that's coming out very soon. One last, I think I'll want to give back the mic to Namir and Mo as the fintechs that have chosen to, again, the UAE for their startups, and one last word, what advice would you give to anyone trying to take the UAE as a home to their startups?
Mo, you wanna go ahead? I mean, I have just a few recommendations, right? I mean, UAE is a great launch pad. It gets you projection regionally. It also gets you projection globally. If you're a founder, the important thing, gone are those days where they say that you just launch, right? These are the days where you build some substance when you're launching something, right? So before you launch, make sure you have right partners already in the pipeline, in place, and then you go for it. Don't rush into making announcements. Don't have the FOMO. They say have JOMO, right? The joy of missing out. So have that for a while and then launch with substance that's going to take you places.
Thank you, Namir. Mo?
Yeah, I think from myself, my perspective, just echoing what was just said, right? I think if you're here watching this, or if you're watching online, UAE is the right place to launch a company. You have access to over 1 billion people within a couple of hours flight. There's a lot of support here, and should I keep talking? I think actually that's my flight. Yeah. So if you want to get access to the market, this is the flight that you have to go on. I think also the other thing is that this region traditionally has been late to adopt certain technologies. So if you look at internet, e-commerce, the whole desktop buying experience was skipped over. Everyone went straight to their smartphones. In the same way, this region has been historically, I mean the region as a whole and not specifically this market, the region has been underserved by financial services. And that's why we believe that digital assets, fintechs, telco, super apps are the ones that are going to bring those financial services along the last mile to that customer. So that's why we really believe strongly that over the next decade, this is going to be the place to really build really exciting use cases for everything, financial services, banking, trading, investing, lending, payments, all those things.
Thank you, Mo. I think this panel has been perhaps a bit as exciting as a cryptocurrency surge. I hope so. Thank you very much for listening. Thank you, esteemed panelists, for your valuable inputs. I think this is it for us.